You know what, traders? I think I was wrong. Let me tell you what I'm talking about. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, I'm running a webinar today and I'm going to be teaching you my #1 trading system that I've been trading for majority of my trading career. Plus I'm going to share with you the 3 secrets that I use to go from $250,000 in debt to making a full-time income. Very first link in the description, guys. Click on that. Join me for my next free webinar and I'll see you there. Alrighty, so I was wrong, but actually I'm never wrong. I'm always right. What's that saying anyway? Guys, I, for myself, have been bullish these markets this entire year. As you guys will know, I've been like telling you, the trend is your friend until the end, right? I personally have been long this market for majority of this year. So my money has been long this markets. But where I may have been wrong, and the jury's out, or the jury's not out yet, right? But I came out and did a video yesterday and said, you know what, guys, I'm expecting to see a bit more of a pullback first before we see the end of the year rally. And I was saying, like, look at the S&P 500, we're dropping down. We could come back down to this low level through here. Yeah, we've got the Nasdaq as well too. We got the Nasdaq. Come on, software. See, now I'm doing a recording. The software just says, we're not going to work today for you. Now you're doing a recording. Dow Jones. Okay, so the charts are not going to work for me now. All right, we're back now. Technology. So I was also saying too on the Nasdaq, you know what, guys, we could actually be getting ready for more of a free fall. Now, we're not out of the woodworks yet on the markets there for a bit of a free fall. Bit of a pullback. But we are holding very, very, very strong here. Same for the Dow Jones as well too. You can see I actually used the Fibonacci level and I said, you know, we could actually be getting a bit more of a pullback. I'm expecting a bit more of a pullback before we see the rally. Guys, I am long this market, so the pullback, I didn't know how long it was going to last. Again, my money is long. I've been long this market for this entire time. You guys that have been following me for the last 6 months know that, right? So I haven't changed. But I did come out yesterday and say, you know what? I'm expecting a bit more of a pullback before we see an upward movement. Maybe I was wrong. Maybe the pullback, we're not going to get as much of a pullback I was expecting because today, like, look at today, right? Look at today. Let's actually bring up the daily chart. This is today. This is the candle. Bit of a drop down and then woofa, straight back up to all-time new highs. Now check this out, traders. Okay, check this out. Let's go back to the black bars. Oh, by the way, traders, some people say, John, why do you use black bars? For me personally, guys, and the one thing that's kept me in this game for so long is one, I do whatever I can to remove the emotion from the markets. Right? Like, for example, I have been in a trade now for a week and it was a short-term trade, meaning I was in and out very, very quickly and within, say, within a couple of days to a week at maximum. And today I actually got out of that trade and it took a week for that trade to eventuate, for that trade to play out. But I made a really nice profit today on what I call a short-term cash flow generator trade, right? You know, the short-term cash flow trades. On the webinar with the link in the description, guys, I talk to you about what those short-term cash flow trades are and so on and so forth. You'll be able to see the pattern I use and so on and so forth. But that's not the point here. The point here is that I use these black bars, guys, because I'm trying to do whatever I can to remove the emotion as much as possible in the markets to make good, rational, calm, non-fearing decisions. And so when I look at the markets from not a bar perspective, but more from like a high-low perspective, highs and lows, which is the trend, it gives me confidence to say, okay, we are in the midst of a big bull market and these pullbacks here are just pullbacks, right? And so that's the reason why, by looking at this, and this, like, guys, that's the reason why I've been long these markets for majority of this year. And I still am long this market. So I'm expecting an incredible move. In fact, you know, if you guys see I did recently, I talked about my 2022 targets. If you haven't seen that, then at the end of this video, you'll see the featured video at the top. You'll see the featured video. You'll be able to see that. You'll be able to click on that and go check that out. But again, if you'd like to learn more about my trading system, where I actually trade and so on and so forth, then join my webinar link in the description. But the thing is, guys, is that maybe I was wrong. Maybe we're not going to get a pullback, because today is very, very, very strong. And if I look at the SPY, like, we're getting a very strong bounce. And look at the volume starting to come in, right? The market dropped, and look at today's volume. Today's volume really started to tower above. A lot of buying activities coming into today. Which totally surprised me, because I was expecting to see just a little bit more of a pullback, maybe a little bit more of a pullback, and then away we go, right? But maybe that's all she wrote. Maybe that's all she wrote before we start to see an incredible end of year rally in the markets. So it's just again, guys, I wouldn't want to be short these markets, which I'm not short these markets at all. I'm not going to try and short a pullback. I wouldn't do that. Because you just never know, just like today, right? You never know how long that pullback's going to be. I want to be long, which I have been, and I've been right this entire year. So that's been awesome. And I still am long, and I see an incredible move coming into next year. So that's why I'm staying long these markets. And we can see what's happening here as well. So we have a look at the Nasdaq, and the Nasdaq is really sort of at this level of support. We really need to see this Nasdaq start to get up a lot more in these markets. But there's after the Fed announcement today, guys, there's nothing else that's probably going to shake this market. It's not Omicron, because that's already been out for a while, so the market's not going to get surprised by that. It's not a Fed announcement. It's not the tapering announcement. You know, I know a lot of people say, but John, they're tapering still. Is the market going to do a taper tantrum? No. Why? Think about this for a minute. They're still at 0% interest rates. They didn't touch interest rates. Yeah, they did some tapering today, but they're still doing $75 billion per month of QE. They're still doing QE every month, right? So people's like, oh, you know, John, but what about the taper tantrum? No, they're actually still doing stuff to support this big bull market. And if interest rates are not enough to keep this market going, they're still doing the stuff to say, hey, let's keep this thing going, right? So, and obviously the Dow Jones as well. Look at this here, just really sort of just strong, right? And we have this like bit of an island reversal type thing. If you guys remember, I talked about this before in the past, right? Look at this here. We had a gap down, and then we had a gap up. That there's like they call it an island reversal, right? Because if the market goes down, it gaps, and it creates like a bit of an island, right? It creates like a bit of a section, and then it gaps up, and then it starts to run again, right? As you can see, it's like a bit, they call it like an island because it gaps down, gaps up. Gold actually, the GLD actually created one, but the upside, look at this here, right? Ran up, then created the island, and then guess what? And then ran down as well too, right? And as you can see, the gap there. So that's an island reversal to up there, island reversal, back down. This one here looks like it could be an island reversal, but for the bullish side, right? Comes down, island reversal, bullish. So that's what we're seeing through there when it comes to the Dow Jones as well too. The Russell 2000 has actually been it's very surprising, but it's going to be interesting to see how much of a follow through now we get. Look at this volume coming in today. How much of a follow through we get on the Russell. If the Russell can start to get back above 230, traders, if the Russell starts to get back above 230 out of all this market through here, it's already had the false breakout. Then it gets back above 230 again. You know that Donkey Kong, right? You know Donkey Kong. I think that Donkey Kong is going to come to town. Let's go, Brandon. I tell you what. So that's what I'm seeing through there, traders. Move out. Actually, I'll just looking at some of the sectors here. So looking at the financial sector as well, we can see that financial sector. This is actually the XLF here. Financial sector is actually looking quite strong here, especially stocks like JP Morgan, and there we go there, right? So especially things like JP Morgan. So I'm really keeping an eye on JP Morgan. As you can see, that was that trend line through there, and now we're holding through here. If we can start to get back above 165, traders, then I believe that could actually be a very the start of a very strong move out of JP Morgan. And there's a little bit of a gift for you guys. So moving over now through to the gold market. And again, I expected to see gold come down. I expect to see gold come down with the stock market, because the way that I'm seeing this, traders, is that when we do see that incredible move to the upside, like I'm expecting to see, I believe everything is going to go with it. Right, traders? So as I said before, I'm expecting to see just one incredible move over the next 6 months. And I'm expecting gold mining, like everything to go with it. And then when we see the crash, which the crash is coming, then which is going to bring in the next Great Depression, which is going to bring in the New World Order, which is going to do all that sort of stuff, right? If we go back and have a look at, you know what, let me actually see if I can bring up let's bring up a chart. Let's bring up the Dow Jones 100-year data, all right, of the 100-year, and look. I'm expecting something like this. So let me just make that open highlight close again. Well, actually, let's just make that candlesticks. There we go. Actually, there we'll do that there. Actually, you know what? Let's just go line here for a minute. Let me make that a bit thicker, and let's go open highlight close. Yeah, there we go. Let's just keep it through there, all right? So remember, guys, this is a yearly chart. I want to see, can I go back to quarterly chart? I want to see, what does that do for a quarterly? Can I actually go back? Oh, I can too. Cool. There you go. Right. So remember this, guys, this is a quarterly chart. Come on now. Come on, software. Look at this, guys. This is the last since 1930, right? The Great Depression, and then the massive boom. Software. Tell you what, traders, my software is not really working today, but I'm expecting to see. Come on, software. Do your thing. Alrighty. Software is now working. Hopefully it stays working, at least for 5 minutes. Otherwise, I'll be going to TradingView. So remember, guys, this is the Roaring 20s. And remember, guys, why was the 1929 crash, which led into the Great Depression, so big? Why? Because we had a big crash in the markets is followed by or preceded by a big boom, right? We don't get crashes without a bubble. So we're having a look through here. Look at this again, guys. This is a quarterly chart, and let's actually see. Can I go down a bit more? Can I go down into a monthly chart? Well, can I go back that far? I can too. Oh, how good is that? All right, this is now a monthly chart. All right, this is a monthly chart of the 1929 chart, right? So we have a look at this here, and so as you can see, look at this. This thing just went absolutely just burko for a long time, right? Went up, went sideways, and then we broke out, and we went actually up again, and we just went up. Now, I believe we're going to do something like this, but in a very, 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 very short period of time, right? Because back here was just the just basically people buying into the markets, right? It wasn't really the Fed coming in and doing anything, and interest rates and that sort of stuff. In fact, they actually started through 2000 and let's actually do this here through 2000 and I'm pretty sure I just read Ray Dalio's stuff again, so I'm pretty sure it was from 2028. They actually started to raise interest rates and kept going. Put it this way, traders. In 2029, which again, we still had plenty of time for the top in the markets. That's when some people, if you watch the documentary, it's on YouTube as well too. If you watch the documentary on the 1929 crash, you'll be able to see that's when the shoe shine boy was like saying, "Oh yeah, I'm in the stock market. Are you?" I remember that when I remember that being the same for cryptos, right? Just when I start to hear people being part of these markets that they don't normally trade the markets, it's like, oh, we're getting pretty close, right? But we're not there yet. We're not getting that with the stock market. Nowhere near that. People are like, oh, run away. So we got this, right? And then that's led into depression, and then that's what led into the 1930s. So I'm expecting to see something like this in a very short period of time, which will then lead into the greatest crash of all time. Because everything gets bigger and bigger and bigger over time, right? We see that everything gets bigger. The QEs get bigger, the printing of money gets bigger, the bubbles get bigger, the crashes get bigger, right? Everything gets bigger. So I'm expecting to see the greatest bubble of our lifetime, followed by the greatest crash of our lifetime in the markets. But guess what? We are in the middle on the big picture anyway, over the next couple of years. Maybe over the next maybe only over the next 6 to 12 months, and that's it. But we are in the middle of this part through here. We're not here yet. Right? We're not there yet. They haven't started really putting on the brakes. Yes, they did a bit of tapering today, but the interest rates are still at zero. They're actually still doing $75 billion every single month. So it's just that's what I'm expecting to see out of the market. So if I go back to this chart here, which is gold, I'm expecting to see a very nice rise out of the mining and metal stocks, along with the stock market. And then, yes, when the market does crash, gold and silver will pull back as well too. But here is the thing. This is the decade for metals and miners and commodity prices. Yes, we will get a big crash when the market crashes, but we're probably likely to see a massive bubble first, vertical action in the markets. Massive bubble first, massive crash second, and then out of that comes, to me, one of the greatest mining and metals booms we've ever seen, because I believe this is the decade for that sector. But everything's likely to rise with that. So I was believing on a short-term basis, we're probably going to get a bit of a pullback here on gold. We may even still do that. But the big picture for me, traders, is that everything, to me, we're likely to see everything rise very, very nicely. And maybe over the next six short-term, bit of a pullback. Maybe the next 6 months, I'm expecting to see everything start to rise again to get everyone long, and then they're going to start to raise interest rates next year. That's what they're talking about. So they're probably going to start to do that again next year. So I wouldn't be too surprised, traders, to see towards the end of next year, maybe the end of the next year, we're going to into the September-October period. We would have already seen one of the most craziest bull markets in history. Maybe that's when the Fed's already started to actually not just taper, but go back down to zero tapering, like zero QE, and then actually raising interest rates. That's when I believe things are going to start to get a bit shaky. But from now on, guys, you know what? Maybe that Santa Claus rally is back on.